Welcome back, folks. All right, so this is going to be a really brief review. Some of you guys that always ask me to get right to the point, you're going to like this one. For those that want to have a little bit more jawboning or the shotgun portion of this, I'll have to defer that. I don't know if I'll be able to do it today, but if I can't get it done today, I'll do it tomorrow, sometime tomorrow morning. I'll announce whatever that time would be on X. So, all right, so we're looking at April 4th, 2025. This is NASDAQ. All right, so you'll see what these levels are in a moment. But we have at 9:30 Eastern Time, here's first presented fair value gap. After a high runs short-term buy-side liquidity here. First presented fair value gap. When we're bearish, comes back up in, offers multiple opportunities to get short in here. The very first one is this right here. Moves lower, back into it here, and at the end of the opening range, which is 30 minutes, 9:30 to 10 o'clock Eastern Time. During the 9:50 to 10:10 macro, all in here, every one of these opportunities here gets short. Then we have this buy side and bounce sell side efficiency once price breaks away and through it. That's a inversion fair value gap, and it trades all the way down to my objective I gave you, which was 17,750 on NQ. And I mentioned that it could trade to 17,350, but I didn't feel it was going to do it yesterday. And you'll see that it got real close to it, but it didn't get there. So at the 10:50 to 11:10 macro, price rebounds right back up into that inversion fair value gap there and touches the high of the wick that I gave you as a discounted rate to watch for the targets basically on NQ on the daily chart. Market uses the inversion fair value gap here, breaks lower, trades down into the upper quadrant of the wick on the daily chart, which we'll see in a moment. It breaks lower, back down and went below 17,750. And then we're in the lunch hour now. So it goes one more time, sweeps below the low, and then comes all the way back up into the 150 to 210 macro. Now for the afternoon, I want you to look at it this way. We have 130 is that the ICT stuff, the stuff that's not in books, and no one knows because I'm still teaching it. The opening range for the PM session. Okay, so George Angel never taught this. Okay, Larry Williams never taught this. Gann never taught it. Wyckoff never taught it. Supply and demand guys don't know anything about it. So again, I have to twist that knife, let everybody know that this is mine, and you'll have all the real details in the book. But for now, I'm just showing you little pieces. But the first presented fair value gap in this run here, the first presented fair value gap, if you go through all this, watch, ready? That is too small and insignificant. Contrast that with this. See that right there? Much more prominent. And there's a volume imbalance right there. So if you take that and you add it to this candlestick's high and you drag it up into the volume imbalance and project that forward, you'll have the afternoon set up here going into the 3:15 to 3:45 macro. Remember, there's that 30-minute interval between 15 minutes after 3 Eastern Time to 3:45. And I guess we'll be better if we put it on the chart. You'll see it right there. Drag it over to 3:45. There it is. And there's your candle at 3:45. Turning it consequent encroachment of that inversion fair value gap, which is the first presented fair value gap of the PM session opening range, which is 1:30 to 2 p.m. Eastern Time. You are absolutely welcome, trading community, for that gift that just keeps on giving. Beautiful. Look at the body stopping inside of it. There. You're going to tell me there's no algorithm? You're going to tell me that's buying and selling pressure? I'm going to tell you you're full of grade A malarkey. And then back to consequent encroachment and sends it lower, trades down below 17,550. And the low comes in at 70,387.5 right in there. It's beautiful. All right, so I'm going to take you up to the daily chart real quick. And that's these levels here on that wick. That's the upper quadrant, consequent encroachment, lower quadrant, and the low. All those levels here, you'll go back into the 1 minute chart I was just showing you, and all of that will make sense. This is the next draw on liquidity after we punch through this low. I personally think we're going to gap lower and be below this low on Sunday at 6 p.m. and then make a run below that low here. If it wants to go further, we have this low and this actual real liquidity void, which is a common gap. That's what a liquidity void is. A inefficiency like this, that's not a liquidity void. There's actual prints, book trades there, buying and selling. So that's actually not true when you call that a liquidity void. Just want to toss that in there also. And then here's that gap just extended forward. So we were looking for that here. Pay no mind to this line here. It's probably going to be random if it gets down there. But all of these levels here are all pertinent and just beautiful. After seeing the relative equal highs, I told you that we would run for those first. Remember, go back and watch all that analysis. We would run those first and then take the sell side down here and work towards going into all the levels we're looking at now. So it's been a beautiful first 3 months of the year. And then on Sunday, I will see what we get at the opening at 6 p.m. You can keep up with me on X around that time. And I'm sure I'll have something to say about it then. Like I said, if I can do the Shotgun Saturday portion, I'll do it sometime today. It'll be on X. I don't want to do it on the YouTube channel because now I've done this video here. If I can't do it, then I'll do it on X tomorrow morning. And I'll announce the time when it is and what it's about. Okay? Until I talk to you then, Lord willing, be safe.